Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky to have my first return guest. This is a Leadership in Insurance podcast first. We are joined by CEO of Kayna, Paul Prendergast, who previously came on with Blink Parametrics. So good morning, Paul. How are you?
Morning, Alex. Great to talk to you again.
Yeah, and how do you feel about the accolade of being the first repeat guest?
I didn't realise that. I will treasure that till my dying day.
I thought so. Of all the things you've achieved in life, this is the one. Well, look, very kind of you to come back. It's evidence that I treat people reasonably well, I'd like to think. And look, without me sort of barreling on, love you to introduce the business and your latest adventure.
Yeah, so we're gluttons for punishment, Alex, and myself and Peter Birmingham, my co-founder. We've been working together for forever now at this point. We started this business called Kayna. I mean, Blink was an incredible journey, starting in 2016, getting acquired, work with the guys at CP Group. It was great success in Parametric, and they're going gangbusters, so it's great to see. We learned a lot through that, and we're lucky to go through Lloyd's Lab and, the FCA Sandbox and working with lots of underwriters and learning, we knew quite a lot about personal lines, but we started to get exposed to commercial lines and particularly small business. Mm-hmm. And as somebody outside the tech world has started a number of small businesses over the years, it's a really tough place. So we to succeed and, your block and tackle businesses, running hairdressers or restaurants or whatever that may be. And the insurance, we looked at this and we were amazed at the issues around small businesses and insurance, just staggeringly massive issues. And as an insurance industry, we said, I think we can do an awful lot better. And how can we do that? So with this business, we just decided to try to tackle a monster issue, and the monster issue is small business insurance, and how do we make that much, much better? Mm-hmm. So what Kayna is Irish for equals, and hopefully that'll become apparent. It's all about the insurance that you get equals the business that you're in at that point in time. Mm-hmm. So Kayna is an embedded insurance insurtech startup. But we've taken a different view on embedded insurance. There's a ton of great embedded insurance companies out there right now doing cracking work. We see that as almost the first wave of embedded insurance companies. Where it can get to is fascinating. Simon Torrance, who's kind of the embedded insurance kind of guru, we reckon about 25% of all P&C will be embedded in a couple of decades' time. So it's fascinating. Mm-hmm. It makes a ton of sense. So wave one, really, the innovation has been about the same products distributed in a different way, embedded into digital platforms effectively. Mm-hmm. Brilliant, absolutely brilliant, and great to see it. So our view with Kayna is the next wave will be, the innovation will be obviously through the platforms and distribution, but also in terms of the product and the claims experience. Mm-hmm. So we look at platforms as not just smart distribution. We look at certain platforms, and I explain how our route to market is going to be quite different than a lot of people, is a source of rich, interesting data, which will allow us as an insurer to price the risk much more accurately, therefore give much better insurance to the small business. Mm-hmm. So innovation, moving from just distribution to distribution, product, and claims. And that's what we're building with Kayna, and really, really exciting. We're working with the folks at Founders Factory, backed by Aviva. That's been great. They're a great bunch of folks, and we've been there now a good few months and working away quietly. And I suppose we went out of stealth mode in middle of December. Mm-hmm. So we've early software built. Lots of really good conversations happening right now. So very, very hot space. So yeah, this one's got legs,
Yeah. No, well, it's not. It's nice to see you excited, and I don't mean that in references that you weren't excited about Blink, but it's interesting for me that your enthusiasm for the space, because it makes total sense to me. Embedded is definitely, if it wasn't the buzzword of 2021, because I think that probably was parametric, it probably is the buzzword of the 2022. And you touched on some of it there, but I really want to get to kind of how you differentiate yourself in the market that's got so much investment, because we've seen some huge investment in embedded insurance.
Huge. And great companies. They're amazing. They really are cracking people, and I know a good few of them, and they're really good at what they do, and it's great to see that. And they're doing serious volumes. It's not just hype. The insurance policies are being sold at a decent scale. So the big difference really is we're only going to be working with vertical SaaS platforms. So what's a vertical SaaS platform? So really that's what, always looking at how do we solve this problem for small businesses. So all through myself and Peter, when we've been looking at businesses going back, it's all about the data. So where is the data to help us solve this problem? And as we looked at the market, there's a fascinating report from Andreessen Horowitz, the famous VC, and they came out and said, okay, how software is being bought changes every decade. 4 decades ago, it was on-prem. Then it moved to SaaS. That was a massive change. And then how software was bought changed again the decade after, where people started getting free trials of HubSpot and all over the business, and then suddenly procurement caught up and bought an enterprise license, and that's how you sold it, giving free trials and developer first, etc. So that was a major change in the last decade. What's happened really now at the start of this movement is, and you saw software being built for businesses and small businesses, and they were horizontal. So HubSpot doesn't mind what kind of business you have. It's a great marketing platform. You've got great accounting platforms across all types of businesses, HR management, you name it, all these different pieces. Now, you needed to work with lots of different software platforms to run your business. But the massive change is you've got all these software companies coming out going, we're not going to go across, we're going to go really deep and narrow. So example I give is a fantastic Irish company called Forest with a PH, and they provide software platform for the beauty industry. And there's lots of competitors. And so if you're running a hairdressing salon, you use that platform for every single thing to run your business. You use it to acquire your customers, you use it to get paid, to manage your staff, manage your inventory, every single thing, and it's getting deeper and deeper and deeper. And we said, okay, that's interesting. Now, are people using this? And then, to be honest, as we went through the research phase, we couldn't believe how big this vertical SaaS space was. And there's about, I'd say, comfortably 20 unicorns in the US at the moment in the vertical SaaS. Bessemer Ventures have also said, they say one of their predictions for this year is a tsunami of vertical SaaS. And it kind of makes sense. So you're a small business, I need 5 or 6 tools to do stuff. Or, oh my God, these guys understand me as a hairdressing salon. They know every single thing that I have to do. So that's really, really interesting. And from an insurance point of view, you've got incredible data in those vertical SaaS platforms, really unique data where you can't get anywhere else. Big issue, and we always start, every business we've started, we've never started, funnily enough, with we need to have a great customer experience. Everybody wants great customer experience, but we always start with the underwriter. From the insurance world, if you don't have a solid proposition for an underwriter where they feel they can properly run this business, your customer experience is gone in 6 months when the claims start coming in. It'll all be changed. There'll be excesses and there'll be this and there'll be that, and it'll just be a bad experience. So when we look at the data that's available, so us and our underwriting partners can price this risk automatically, and the efficacy of the data is really strong, because this is where those small businesses run their business. They're there every single day. This is not something that they pop on once a month to update manually. So they're running their business. When you ring up to book, a restaurant, whatever, it's all done on these software platforms. So you're getting real-time data about that business, which is quite unique. So I think that will allow us to build bespoke insurance for those small businesses. I think the second big problem that we've seen is as businesses change. One great insurance person we were talking to said, Paul, the big difference now is 20 years ago, somebody whittling away fixing shoes, small businesses were simple. Small businesses aren't simple anymore. People are really dynamic, doing lots of things, and insurance need to reflect that. So January 1, if you're lucky enough to get the right insurance January 1, but your business changes over time. And we've seen that petri dish of COVID and Brexit. If you're running a business and you're holding inventory, suddenly Suez Canal, supply chain issues, I need to not have 200 grand worth of inventory, I need to have 1 million. That's a massive change in your risk profile because you've got that amount of inventory. Of course you'll remember to ring your broker or your insurance company, but nobody does. BIBA came out with a report. 80% of small businesses don't tell their insurer or their broker because, and I've, outside of the whole exciting tech world, I've had small businesses for years. You don't think about it. Once a year, the broker says, come here, that thing is up. Oh God, yeah, grand. And I do it and you get it done and then you don't think about it until...
I'm literally sitting here thinking, I've had someone start with me on Monday. I haven't told my insurer. So I've got a new member of staff.
And you're in the game. You're in the game.
No, I'm in the game. I'm just thinking, Mark L better not watch this. Oh, yeah.
That's how they'll find out. They'll watch your podcast. And
that'll be it. They'll be after me, cancelling my insurance. But it is. I think it is that as much as anything as well. It's that you don't think about it. But even if now I'm thinking about it, my route to changing that, it's to phone them.
It's to phone them.
And I haven't got time to phone them, or I have got time to phone them, but it will go in my diary, and it's the thing that will definitely get moved. And it's the inconvenience of having to do that. So being able to not even tell them, but they just know because the information is there.
Yeah, exactly. And to be honest, you talk to brokers, and I think brokers typically great people do a great job. And that's why Kayna is very much focused on the smaller businesses.
Yeah.
If you were selling a large insurance policy with a large premium, the broker's making a decent return on that time invested. They can spend time to really understand that manufacturing facility, of course. But if they're making £300 commission, and you can hit them over the head and say, you must, and they're going, I must. If I do that, I'm out of business in a year.
Yeah.
If I hire all the people to do that level of risk assessment that I'm required to do to really understand and then check in with them, every month, every 3 months? A lot of brokers say, I rock in and say, how are things? I have no idea what's happening with the business. So I'm going and I'm trying to understand. It's very difficult for the broker guys. It really is. So I think we want to get away from the proposition that it's that niggly thing in the back of your head going, I must buy insurance. And the amount of small businesses that don't have insurance is phenomenal. 40% of small US companies have zero insurance.
I find that staggering. That's quite frightening as well. And do you think that's an education piece as much as anything? Or is it...
the insurance industry, to be honest, the insurance industry pays out so many claims. It's massive. But we hear about the ones that they don't pay out.
Sure. Yeah.
But it's such an important part of the economy to manage that risk as a small business person, large business person. And these small, and the really, education is one piece, but and really when you look at what is the insurance industry doing right now to do this, and education is part of that. I think convenience is a huge thing, and lack of knowledge of starting a company going, well, do I need PI? What is PI anyway? And do you know, and all these things. So really, you've got to present to that small business person what they need or what are their options, where they live, and they live online on these vertical SaaS platforms, and not a case where they have to. Does anybody know a good insurance broker, or they Google stuff, and effectively they kind of have to be their own risk manager if they go direct.
Yeah.
So the broker isn't being paid enough, and so the broker really isn't being paid enough to do massive risk assessment, and then you've got going directly to a website to do it. You're going, I don't know, I suppose I get this, you know. So it's very difficult. You know, what limit should I have on my PI? Oh, $1 million. Ooh,
yeah.
Well. And then
that's something you and I talked about, wasn't it? Because that was a question for me. They said, well, what PI cover do you want? And I'm thinking, well, I don't have the information on what's an average PI claim against someone who works in my role. I don't know. You tell me what that is, and I want that much cover. But you know, asking me, I don't know, 50,000, $1 million. Like, who knows? I don't want to, and you don't want to pay. And I think that's where it really kind of. Some of it I have empathy for, because I completely understand from it's not worth the investment and time. Where I have a bit less empathy from as a consumer kind of point of view is those situations where it's likely that I'm either going to be underinsured or overpaying.
Yes, absolutely. And overpaying is an issue.
I'm unless I get it bang on, I'm definitely doing one or the other, and neither of them are good result for me.
Exactly. And that is the whole point of this, is that, you know, I think it's not as large an issue, but overpaying is certainly an issue.
Yeah.
Absolutely an issue where you're wasting money, and you know, and nobody wants to do that. So it's all about the accuracy of giving you the right insurance. But as your business, you know, through these platforms, we know that you turned over $1 million last year. You had a spike in business. It's now you're doing 200 grand a month.
Yeah.
Your BI cover needs to change, or else.
Yeah.
You know, and I explain to buddies of mine who are small business people, I explain the average clause to them, you know, particularly around their property insurance, and they all fall off their chair, and they can't believe that that's actually a thing, you know, and they only find out when they make a claim and they go out of business because they can't afford it. So, you know, this is not a small, nice to have problem to solve. So we believe this is a big issue. We've talked to the regulator, and they're going, oh God, please, this needs to be, you know, this is a colossal issue. And the regulator only has certain tools, you know, and puts the onus back on the broker channel or whatever. And that's very tough for the broker channel, because do they just make everything more expensive if I have to spend 3 days every whatever period of time? So it's a big issue. It absolutely needs to be resolved, and the only way to do it is with technology. And we want to the point I was making earlier, we want to move away from I must get insurance. We want you're on your platform running your business every day going, okay, this is my operating system, and your insurance is this. You know, typical businesses like you got these types of insurance for these limits, and it's you know, whatever it is, 300 quid a month or 200 quid a month. Great. And I can buy it through the platform. So the other really key thing is talking to lots of platforms. There are loads of insurance options right now, but a lot of platforms going, my whole life is acquiring these customers, is making sure that I'm solving problems for them. I'm going deep and narrow, and I am the best platform that they can use. So they want to offer fintech and insurtech or financial services, insurance services to their customers, but they want to have an element of control. They don't want to just get another scheme policy that is off the shelf, that costs the same for every single person, isn't leveraging any of their data points. They have huge amounts of data. They're going, the data is here, but their existing insurance partners aren't in a position to integrate that data, make sense of that data, change the underwriting, you know, et cetera, and just say, well, it should be 30% cheaper for this customer and 40% more expensive for that customer. So that they're finding that frustrating, number one. And then secondly is a lot of them don't want to have that affiliate type, you know, a big button, don't forget to buy insurance, and click, and they lose their customer effectively. So it's key for us is we don't want to have take their customers away from them. We want to enable them to offer better insurance to their customers, and we'll power all that. So it's powered by Kayna, and so we do all the heavy lifting to do that. But it stays on their platform, and it's their customer. That's a really key thing, that platforms want to have some element of control over the tone of voice and the experience, etc. So they don't want to have this amazing experience and then press a button and everything's done by phone, you know, or
that is something that I've actually witnessed myself. I mean, the CRMs that I use, I think you and I spoke before, like all of my activities on there, the jobs I'm working on, the amount of staff I've got, and there are things, but I have to leave the platform, and I don't want to do that either. So it's interesting. I wanted to get your view. I mean, we touched on kind of vertical stacks, but is there not a systemic risk attached to kind of vertical stacks? You know, you commit to this stack of technology to run your business. Surely there's a kind of systemic risk attached to that, and I wonder whether that's kind of slightly at odds with the culture of kind of choice and consumer choice at the moment. I know that's kind of stepping slightly outside of your sort of conversation, but as someone that knows technology and small business, I just wondered if I could get your view on that.
So just so I know the question, from an insurer's point of view.
No, so more from a kind of business point of view.
Okay.
Do you sort of do you think there's a sort of systemic risk to right? I move my whole business onto this one kind of vertical, and then you know.
It goes wallop or
yeah. I mean, does that seem culturally at odds with this? Or we can pick and choose our technology and we can embed them all together.
I mean, look, here's the reality: everything is going in the cloud. Everything, you know, our whole lives, you know, AWS was just such a game changer, and now Google are doing the same thing fantastically, and there's a number of different players, and obviously Microsoft. So, you know, so that horse is bolted. So everybody's going in the cloud. I think, you know, Amazon might go down for 3 hours, and we all pull our hair out, but they'll come back up, and all the data is there. So, and it's, you know, the days of working with a software with a vendor and it's an on-prem and you're hoping that the data center isn't flooded. The risk is so low that they're going to lose all the data. It really is phenomenally low. I'm sure there's options on those where you can download your data and stuff like that, but I think the maturity of the hosting services, etc. now compared to, I remember building tech companies and, you know, 15 years ago, it was just blindingly difficult, just getting all that stuff set up. Now you do it on your phone in 10 minutes. It's very straightforward, but the security and where the data is held, etc. So I think the risk in that is the risk would be it might go down for a couple of hours for some reason, and it does happen the odd time. And there's insurance for that now.
There is.
Parametrics, and so. But I think inherently as a business, the advantages of that compared to the disadvantages are, you know, light years. I would argue anyway.
Sure. We've touched on this briefly, but the thing you're attacking, there's this SME coverage of this risk for underinsurance, this risk for inaccurate pricing. It's like really well known to the point where, you know, we were saying about the regulators going up. Why do you think it's taken so long to address?
It's a good question. I think there's a reason why it's only happening now. It's because vertical SaaS is relatively new. When I say relatively new, 4 or 5 years.
Sure.
And insurance business is, you know, just catching up now, and we're hopefully going to lead that vanguard. There wasn't the opportunity. The data wasn't really there 10 years ago. Why didn't we do it? Well, the vertical SaaS didn't really exist, and then you had to get data from, you know, lots of different data points. You know, a lot of people talked about, let's do open banking. That's great to a point, and we did that, and Blink, you know, was interesting, but there's only it's an abstract layer of information. It gives you some information about the business, and it's useful for some insurance product, but it doesn't give you really rich information about the business. So that was available, and people, some people have built product on that. But really, the vertical SaaS is only really there in the last 4 or 5 years. So there's a reason why it's only starting now. December 16th now, us. And so I think that's the key reason. And I'm sure lots of people are looking at the space, and embedded insurance 1.0, if you like. Same product, new distribution, working with the big airline companies or digital platforms. That's great to see that. That to us is the proof point that, people want convenience, Amazon Prime, it's just so easy, just good. Will I really spend an hour searching to get that thing 8% cheaper and then have to pay or I just go on to Amazon? And they're selling insurance through these digital platforms. Now the next one is going further, embedding further in, getting data, using that platform to make the insurance better, and then the claims process. And we always say insurance is not just about selling insurance. The product hasn't really been used. You want that experience to be good. You want the insurance cover to be accurate, because at the time of claim. So I think the claims piece, and obviously with Blink, we had a ton of experience in parametric. We used to take a long time to convince our insurance partners you did not need a TPA. Typically 6 months of conversation. Then they go, okay, I trust you guys, the tech, the data. And so we launched products where we would literally come in on a Tuesday morning going, how many claims were paid last night? And we go, oh, great, all these claims were paid, and no humans involved. And it was done immediately. And it was phenomenal experience for the customer, and the insurance companies were just heroes for launching this kind of new product. So again, on the back end, there's really interesting opportunities to take lots of unnecessary costs out of the claims process. For example, first notice of loss. If I'm on a property software platform and I'm a landlord and I'm booking a plumber in, there's a leak there in that apartment, and the supply chain is integrated into those platforms. That's the time do you want to start an insurance claim? You need to make it easy for them. Yes, it is great. We'll suck all that data. We have that on our platform, and that's the first notice of claim. If it's less than 300 quid, great. The decision might be, it's kind of parametric in a way. Decision we made, just pay that out, or you can work. If it's more sophisticated, you go to your TPA at that point in time, but then you're not spending 30 minutes going, now, who are you? What happened?
Yeah.
Where did the thing? And it's money, so they're going, okay, I have everything I need. Now I only need these 2 data points. I need X, Y, Z. So, you can start automating, and then you can start reducing the time of and costs involved with paying out certain claims. So great customer experience, but also taking out costs from the overall delivery of insurance. And then, the fact that you'll have accurate insurance for the small business. There's not a bun fight. There's not a, what do you mean I'm not fully insured? I've been paying my insurance for 12 years. Nobody ever told me. How am I supposed to know?
Yeah.
My turnover went up, and you sent me a letter that I didn't, they'll feel very hard done by, and they do, and then they get on to it, and wigs of the green. And it's not fun.
Well, it's really interesting from a human perspective from both sides, because I was thinking about this. I've said many times I started my career in claims, and the worst thing in the world was telling someone that they weren't covered. You're not covered because of this clause. I worked in commercial motor, and telling a guy that it's Ferrari that it was valued at 60. It was complete write-off, and we weren't going to give him any money for it. It was still haunts me to this day as a 22-year-old graduate. But also you're kind of doing that thing that automation's brilliant for, which is if you're taking away a lot of these pain points. So you've got all the information already. We're not having to do that. That they're covered because it's built into the platform. That means you can genuinely, we like to talk about customer experience, but with insurance, we tend to talk about the brevity of it. Was it fast? Was it efficient? actually you can build in quality there. You can build in like actually customer service, actually sort of going, really sorry that happened, having a sort of going, well, let's get you back on your feet as quickly as possible, and have that richer experience, because you've saved the money in the efficiency, and you've also saved the time to give a little bit of time back. And I think we don't focus on that enough sometimes in the conversations I have on the podcast, but also in kind of efficiency. We go, efficiency gives you time back to do a better customer experience.
Exactly.
And that, that's what I was thinking when I heard that, because I was going through this. My parents got a claim at the moment. It's just been painful. It's a big claim. It's been a painful process. They've hated every part of it. And mostly it's because you phone up and you go, who are you? Leslie Bond. Oh, okay. Next phone call. Who are you again?
Exactly.
Think, if you can take that away, it's a richer experience.
Yeah, absolutely. So again, it comes back to, we think with the underwriting go claims people, if they trust the data that's coming from our platform, and they're going, oh, I know it's Leslie. I know exactly what's happened. I know, because everything is being booked through that platform. I have all the information. I don't have, because it's a grind getting all that data, and their job is to get accurate data. If you're moving from, I'm a data collection person to a customer service person, you just change the way of thinking. So completely agree.
Does I was just thinking about the bad data in, bad data out challenge.
Yes.
Does that dictate the partners that you work with? Like, if there's too much kind of human input of that data, does that impact who you might choose to work with, for example?
Absolutely. So I think it's really working with platforms where they're mission critical platforms for these businesses to run. So if it's something that they pop on once a month and kind of go, how are you doing this month? And they, that's, I want the customers to be onboarded through that platform, the staff to be managed, the inventory to be managed, the payments to be made. And that's exactly where all the good vertical SaaS platforms are going, so that's the operating system. If you take one fantastic one called Toast, in the States, huge market cap, couple of billion, and massive number of restaurants. So the restaurants literally run every element of the business through this platform. So the efficacy of the data is really strong, because is the small business, the restaurant, going to start, well, I won't put that customer through there. Just give me a call and give me cash when you pay. It's just the efficiencies of running there. It's just going to be such a nightmare to try to circumvent Toast and do something else. And as part of it, really, for them to start fraudulently kind of messing with the platform because a claim might be coming down the road, that'll become pretty obvious as well. You've got Thursday nights were packed out, or Thursday nights were 30% occupancy, and then suddenly, so again, of course, strange things will happen, but you'll have access to really strong data, and you won't have to spend huge amounts of money with forensic accountants coming in if you're able to access that data and go, okay, that's a trigger. Not every person will need a forensic data. Those two maybe do, but not all of them. So
because you'll have such a massive comparative data set as well. It's like, you've got a Thai restaurant in New York, and you'll probably have 30 others. So you're like, well, that's
exactly
weird. Like, yeah.
And if they're going, well, Austin, Texas was, went gangbusters, and you're going, well, you were the only one. And we have lots of restaurants there. So all these kind of things that you can use once you've got big data sets, and you can use AI to kind of work all that stuff out. And so that's kind of where we're eventually moving to.
Exciting. And just so I fully understand the model, because I realise I've skipped over this, but presumably it's running as an MGA, and you've got carrier partners in place already. Is that
no? Literally, we're only starting, really.
Yeah,
so
sure.
We're talking to a number of carriers at the moment, and there's lots of interest in the embedded space. So that's going quite well. And we're in the early stage of putting all that MGA in place and building the tech. So this is very much early on the journey. Super exciting.
Love that.
But so I think realistically, middle of the year we'll be going live.
Sure. So I wanted to switch gears and talk about personal sort of well, not too personal. It's a podcast stuff, but personal from a business perspective, because I got introduced to you by some people that knew you anyway, and they were like, "You've got to speak to Paul. He's just like constantly kind of innovating." But I've got to ask you, you sort of, Blink 2016, you sold successfully and relatively early. You just got to your exit. Why jump into something straight away? Like what and how did that happen? Because
I mean, it's the Founders Factory guys who I know for a long time. They're great people. Myself and Peter have been around the block, and you can see all the gray hair. And we literally thought, oh God, that kind of model, I'm not sure. We like doing our own thing, but fabulous people, a lot of people, a lot of operators who ran businesses. And they said, when we're leaving, they said, look, we're interested in better insurance. We're backed by Viva. Here's the model. And we said, that's a great model. Really liked it. And we started chatting to them. To be honest, we said, we won't do anything for a period of time. This opportunity popped up, and it seemed to be a really good opportunity, and we all got on. And then we kind of coming to the end of the summer, we said we'd go for it. We took a bit of time off over the summer, which was great. Gosh, I love it. Honest to God, like if I wasn't doing it, I'd be doing it anyway in my head. And so it's fun. Like genuinely, it is fun to do. And now there's a grind, and it's certain elements can be tough, and it's not straightforward, but it is fun to do.
I was just going to ask you. I was thinking as this happening, I was like, do you think if the pandemic wasn't happening, you'd be doing it because you could get out there and you could be entertaining yourself in other ways? But when we're all a bit locked down, you're like, well, what else am I going to do?
What else am I going to do? Exactly. Yeah. I'm no good in the garden. I tend to kill things, so I better do this.
Yeah. Someone asked me. I was like, I work with the US a lot, so but I haven't got out of the practice of recruitment. You start at 8 and you finish at whenever you finish, but I do US, so I'm quite often here to 8 until pretty late. I just went, I don't know what I'd know. It's very sad, but I was like, I don't know what else I'd do with my time. In a lockdown scenario, if you took lockdown away, maybe something else. But but someone that sort of, you like to innovate, you think about the space, and you touched on it there. If you weren't doing it, you'd be doing it anyway. I wanted to sort of get your picture on did you look at any other opportunities? And what's interesting you at the moment in InsurTech that outside of what you're doing?
I think to be honest, as somebody who's been around it for quite a while, I think it's phenomenal to see successful companies now, not just the hype, but making a real impact. But my genuine view is the innovation around InsurTech has only, if you talk to somebody on the street or small business people, whatever, it's really only impacted them very slightly. I think it's going to be another 5 years, 10 years before that's the new normal. I'm using that term in a different way. But so I think there's tons of innovation to happen, lots of great stuff built, but actually making it commonplace then and getting it to the market and all that kind of good stuff. I think there's some other areas, maybe it's because I'm getting old and cranky, but life insurance. I've had an inkling of an idea around life insurance for a while. It's a completely different take on life insurance. Maybe that's the next one, but I think life insurance is interesting. I think there's huge opportunities there. There's some great guys actually. Bequest are doing some great work in that. My idea would be quite different than that. I think that there's tons of people using great technology to make things better. And we were talking to one insurer. I remember when that big explosion happened in was it Lebanon? Was it last year? And within a couple of days, they had used drone technology to completely almost get a full picture of exactly what happened. Which is phenomenal. Using that kind of stuff is just amazing. So I think I think probably the most encouraging thing for me is there's huge swathes of smart people now in InsurTech. You know, I mean, 5-6 years ago, there was insurance nerds like us kind of knocking around going, well, it must change. We must do something. Now you've got people, and I chat to them and they go, oh my God, these people are just so smart.
Yeah.
They're coming in, you know, young guys and girls, and they're getting into it and they're going, this is an area of interest. So I think there's so many areas. I personally like the whole commercial line stuff, the stuff that's not desperately sexy. Maybe I think parametric is only starting. I really do. I think there'll be a maturity in parametric. I think parametric, you know, looking back at it now, single data point parametric, I think will be less interesting than multiple data points. And when you've got a lot of really smart data folks coming into this space, I think there's some really interesting startups in that space. And I think that hasn't broken through. It's a large enterprise government level, yes. Reinsurance, yes. But day-to-day people, flight disruption, we did a chunk of stuff in different markets. But it really that to me is a fantastic experience. But I think it's going to mature as well. So yeah, very fond of parametric as well.
I think parametrics is really interesting for me because, you know, from a consumer level, that's what everyone wants. Yeah. But that's really what that's what we want. Like, I want a claim that instantly pays out. Yeah. You know, I don't want a claims process really. I mean, we talk about claims is in, you know, insurance. We're not selling insurance. We're selling the claims process. That is true. If you ask me, really, I don't want a claims process. Yeah, I don't want to deal with them. It's like a visit to the doctor. I'm pleased to get to the doctor. I'm pleased to see them when I need them, but I don't really want to go. I just want to be told, oh, that you had a claim. Here's the money. Thanks very much. And so making that work on a richer, more diverse level, I think is really interesting. And I had this conversation the other day saying that, well, no insurtech's kind of done or reach maturity when we see the insurance companies that are fully stitching it together, when you know, when they've got a mixture of parametric, when they've got drone technology that automatically deploys, and you know, we've got some guys coming on that do this augmented reality inspection of claims, and then I was thinking, well, can that be paired with parametric? It's the pairing of all these kind of elements, isn't it?
You know, the famous Nigel Walsh, who's running Google Insurance now, he always talks about there's lots of people with ingredients. Customers just want a cake. Don't give me ingredients, give me the cake. I think that's brilliant. It's so simple, but it's so true. Give me the cake. And you know, so I think I completely agree. Like I had a bang in my car, and the car data should be able to work out exactly. Yes, it is. You know, there's a big bang, you know, and the claims guy came out. I had to wait 4 or 5 days. Lovely guy came out, the motor assessor, looked at that and looked at the tires and looked at this and that and the other, make sure what I did was okay. And then we had to wait a week. And then, you know, so it took, I had a hire car for 3 weeks or something, you know, and just we see this has happened. Well, number one, we're going to get a car out to you right now. Can that be done through data? Like, there's fantastic, really interesting kind of companies, but you're driving around in a computer, you know, all the data is there, and can you take that data and automate that? And you know, so that, but that's what I mean by in 5-10 years time. And then you've got in within houses, you know, you've got all these systems, Nest, etc. You know, it's all hooked up to the cloud, and can you start doing stuff there? But over time, and then long term, I don't want car insurance, house insurance. You know, I want me insurance. Yeah. So please scan me in my life and tell me exactly what I need today, and then change that insurance as I have more kids, or my income changes, or just personalize it to me, as opposed to optimizing it for insurance operations. Optimize it for me. So I think there's tons of, like, that's you know, it's like kind of interested, again, because I'm getting old, in longevity and kind of all that's working, and you know, medical treatments, again, moving away from off-the-shelf medical treatments to personalized medical treatment. Therefore, personalized financial services, personalized insurance, you know, based around the person. But that can only really be done when you've got a really true picture and, again, high efficacy data, et cetera, et cetera. So it's going to be fascinating.
But yeah, that sounds like the big leap forward. Paul, I could talk to you all day, but I think we'll overstay our welcome if we're not careful. So, look, Paul, thank you so much for being a guest for the second time. I'm really fascinated to see what you guys do. If anyone's interested in finding out more, can they reach out to you? Is LinkedIn a good place?
LinkedIn. Yeah, very active on LinkedIn, Paul Prendergast, or Kayna, Kayna.io.
Awesome. Thanks, Paul. Really appreciate your time. Good to speak to you.
Cheers, Alex. Talk soon.
Take care. Bye.